On the 9th of August 2023, Vanguard Australia released their annual index chart. You can download it on their website. I find this 30-year chart incredibly useful in keeping me focused on long-term returns rather than daily volatilities and news-driven fears of recessions, housing crash, or wars. In the last 30 years, we have gone through the Asian financial crisis of '97, .com bubble burst, 9/11's global financial crisis, Brexit, COVID-19 recession, and the Ukraine war. And yet, $10,000 invested in 1993 in the S&P 500 with dividends reinvested would have grown to $176,000. The same $10,000 invested in the ASX All Ordinaries Index dividends reinvested would have grown to $138,000. Another useful insight is that the asset class with the lowest long-term return is cash. As measured by the Bloomberg Osborne bank bill rate, it earned just 4.2% per year. The $10,000 would have grown to just $34,000 versus the $138,000 in Aussie shares. When we drill down into the data, we can see that while the Australian CPI has hit as high as 7.8% in the December 2022 quarter, the 30-year average is 2.7%. Right around when the RBA implemented the 2 to 3% inflation target. Last but not least, we can observe that while the 30-year returns of US and Aussie shares are very close at 10% per annum and 9.2% respectively, their more recent returns have widened, with US shares being driven more by tech companies while Aussie shares driven by commodities and financial services. While past performance is not indicative of future results, I hope this chart will help you to put things in perspective and focus on the long term when faced with short-term volatilities. Vanguard also points out that the best performing assets in some years can be the worst performing in others. Spreading your money over a range of assets can help to smooth out intermittent volatility and achieve more consistent results over the longer term. Thank you for watching. If you like this video, please like and subscribe to help the channel grow.